The power to stop any illusion of problems behind economics and the myths of debt and inflation. Escape the paradox from being a total prisoner of the money game and a path to teach wealth. Written by August Clark. Narrated by Dr. Jeff Hutchinson. Introduction. Globally, government debts have been an important instrument for driving national structural change and infrastructural establishment in low and middle-income countries. All governments borrow both locally and internationally. Debt can be also referred to as functional finance, as it is used to fund bigger projects that anchor the national economy. There is nothing inherently wrong, then, with government debt, as long as it serves its purpose. But there should be a balance between government debt and the employment rate in the country. Chowdhury, 2009. The global inflation rate projection indicates that there has been an increase in inflation from 3.2% to 3.5% between 2020 and 2021. Statista, 2021. When inflation increases, the amount borrowed will lose value that is beneficial to the borrower. On the other hand, if inflation decreases at a lower rate, as was the case between 2018 and 2020, repayment of the debt will be very difficult. This is because the currency gains value when inflation decreases. Some scholars believe that the fact that deficits will burden the next generation is only a myth. However, this notion is controversial given what happened in 2016 in the United States. After seeing the increase in the deficit, the federal government increased the taxes to finance the deficit. Ultimately, the deficit was placed on the shoulders of the taxpayers. People are skeptical about the continuous increase in government debt in the U.S. A lot of questions are crippling people who are seeking answers that explain what is going on. Is the U.S. government going to settle its debt based on the debt size? When will the U.S. pay off its debt? Interestingly, there is a mismatch between expenditure and revenue coming in, which could be the best explanation as to why the debts keep rising. The U.S. government is spending more than its budget. Peter G. Peterson Foundation, 2019. People tend to believe that sovereign states like the U.S. simply won't bother with the debt. In contrast, these sovereign states borrow and spend more than what they are generating because they are the financial powerhouse. They control the whole world's economy. However, the million-dollar question still remains, can the U.S. continue to spend beyond its budget? Economists are still debating about the possible aftermath if such a situation gets out of control. The U.S. government debt is caused by three main drivers, which are demographics. The population composition globally, particularly in the U.S., is made up of the baby boomers who are of retiring age. This age requires federal support to meet their basic necessity. Rising healthcare costs. As people are getting older, their medical expenses get higher. In America, the federal government subsidizes health care for those who are aged 65 and above. Inadequate revenue streams. Failure to raise revenue to meet the expenditure will drive the debt upwards. The government will be spending beyond its capacity that can be termed borrowing. How the federal government borrows. There are several ways through which the federal government borrows to sustain its fiscal budget. The government can sell treasury bonds, TBs, to finance its debts. TBs are short-term with a shelf life of 1 year and below. They are issued to the public to correct the mismatch between government expenditure and generated revenue. The TBs can be sold to the public. Intra-governmental borrowing. The federal government can also borrow from other governmental departments to finance its debt. It can use the Social Security funds to fund its debts and replace the money later. Debt and deficit. The federal debt, often known as the national debt, is the sum of all previous deficits excluding the sum the government has since settled. National Priorities Projects, 2015. When the government runs a deficit year in, year out, the money it borrows is added to the national debt. If the government generates a surplus, the extra funds can be used to pay for some of its debt. Furthermore, as part of the overall spending, the state pays debt interest each year. Measures. There are several measures that can be used by the U.S. federal government to reduce the general increase in the government debt. Some of the measures that can be used to reduce federal deficit are cap government spending, putting a limit on government expenditure, sustainable Social Security, as well as reducing mandatory spending, healthcare expenditure, and tax loopholes. General consequences.
Sample complete. Ready to continue?